Hello friends, welcome to my channel. In today's video, we will learn unit or output costing. This is the method of costing which is used to find out the cost per unit, and this method is applicable where the production is uniform, means where they produces a single variety of product. The products may change in size, color, shapes, etc., but the industries produces a single variety of product. For example, paper industry, mining industries, sugar industries, etc., all these types of industries, they produces a single variety of product, and they adopt unit or output costing method to find out the cost per unit. And the formula to find out cost per unit is cost per unit is equal to total cost divided by number of units produced. So this is the formula to find out the cost per unit. Next we'll see the definition. According to J.R. Batibo, output or single cost method is used in a business where a standard product is turned out and it is desired to final out the cost of a basic unit of production. So according to J.R., this output or unit costing method is used where the production is standard, means where they are uniform in nature. Next we'll see the features of output costing. Number 1, it is the simplest method of ascertaining the cost of production. Second, products are identical. As I already told you, in unit or output costing, the production or the products are identical in nature, means they produces a single variety of product. Third one, this method is used to find out cost per unit. Next, objectives of output costing. Number 1, to reduce the cost of production. Number 2, to find out the total cost and cost per unit. Third, to find out cost of production. Next, we'll see the meaning of cost sheet. It is the document which provides estimated detailed cost in respect of cost center or cost unit. In cost sheet, we record all the expenses or the overhead incurred to produce a product, and these overheads are categorized in 3 parts: factory overhead, administrative overhead, and selling and distribution overhead. And this cost sheet is prepared to find out the total cost and profit. So these topics they may ask for 2 marks. Write the meaning or definitions of output costing, or the features or objectives of output costing, or the meaning of cost sheet. In my next video, I will explain the format of cost sheet. Format of cost sheet. Heading is cost sheet for the year ending, and the columns particulars, total cost and cost per unit. First we have to take direct material. In that, opening stock of raw material, add purchases, carriage inward, octroi and custom duty. Then deduct closing stock of raw material, and the final amount which you will get, that is called material consumed. After that, we have to take direct wages or productive wages and direct expenses or chargeable expenses. After adding these 2 items to material consumed, the amount which we will get, that is called prime cost. Next, add factory overhead. Any charges or overhead relating to factory. For example, rent and rates of factory, depreciation on factory building, lighting, power, etc., works manager salary, all these overheads are recorded under this head, and the amount is called manufacturing cost. In that we have to add opening work in progress and deduct closing work in progress, and the amount is called works cost. Next, add administrative overhead or office overhead, any charges or overhead relating to office. For example, printing and stationery, postage and telegram, rent and rates, depreciation on furniture, office manager salaries, etc. All these expenses are recorded under this head, and this is called cost of production. In that we have to add opening stock of finished goods and less closing stock of finished goods, and the amount which you will get, that is called cost of goods sold. In that add selling and distribution overhead, charges or the overhead relating to selling of products. For example, salesman's salary, commission to salesman, free gifts, samples, advertisement, bad debts, all these expenses are recorded under this head, and the amount which we'll get, that is called cost of sales. In that we have to add profit, and the final amount is called sales. We will solve problem on cost sheet. Here question number 1. The following information relates to commodity A for the year ending 31st December 2010. Purchase of raw material, direct wages, opening stock of raw material, work in progress, finished goods, closing stock of raw material, work in progress, finished goods, factory on cost, office and administrative overhead, sale of finished goods, selling and distribution cost is rupees 1 per unit sold, and during this year they have produced 25,600 units, and we have to prepare the cost sheet to find out total cost and cost per unit, and total profit and profit per unit. So certain information they have given related to opening stock of raw material, factory overhead, administrative overhead, selling overhead. So by taking all these items information, we have to prepare the cost sheet for the year ended 31st December 2010. Now we'll start the solution. First we have to write the heading cost sheet for the year ended 31st December 2010, and above you have to write here output 25,600. So already they have mentioned in the problem that the output of this company is 25,600 in the year 2010. So we have to write here because to calculate the cost per unit, and the column is particulars, total cost and cost per unit. First we have to take direct material. First we have to write the heading direct material. Under this heading we have to take opening stock of raw material, add purchases of raw material or any expenses related to purchase of raw material like octroi, freight, etc. And after taking all these items, we have to less closing stock of raw material. Okay, the format of cost sheet I have already uploaded. Please check on my channel Avanit Academy. Okay, so first we have to take opening stock of raw material. See, opening balance they have given opening stock on 1/1/2008. So raw material amount is opening stock of raw material is 16,000. Okay, opening stock of raw material 16,000. Add purchases. So purchases, here it is purchase of raw material amount 96,000. Opening stock of raw material 16,000. Add purchases 96,000. Add these two figures. 16,000 plus 96,000, you will get 1,12,000. Then less closing stock of raw material. Closing stock of raw material, closing information, here it is. Closing stock of raw material is 17,600. From 1,12,000 minus 17,600, you will get 94,400, and that is called material consumed. Okay, the first part is about the raw material. First you have to take opening stock of raw material. In that you have to add purchases, and in problem if they have mentioned octroi, freight or any charges is related to purchase like carriage inward, all these expenses you have to add. But in current problem only they have given purchase of raw material, so I have taken here purchases. After that we have to less closing stock of raw material, and the final amount we have got 94,400, that is called material consumed. So in this problem we have to calculate total cost plus we have to calculate cost per unit. So 94,400 is the total cost of material consumed. Now we have to calculate cost per unit. For that what you have to do, 94,400 divided by 25,600. Understood? 94,400 and the unit produced during the year is 25,600. So divide this. You will get 3.69. Understood how we got this figure? 94,400 divided by 25,600, you will get 3.69. Next we'll go to other item. Any item if they have mentioned in the problem and it is direct, okay, any direct expenses or any direct overhead if they have mentioned in the problem, that we have to take here before the prime cost. So in this problem they have given direct wages, so we have to take here direct wages, that is 80,000. Total cost amount of this direct wages is 80,000. Now we have to get cost per unit, no? So 80,000 divided by 25,600, you will get 3.12. 80,000 divided by 25,600. So for every item, every amount you have to divide it by 25,600 to get cost per unit amount. Okay, so after taking direct wages, add these two amount, 94,400 plus 80,000, you will get 1,74,400. And per unit column same, 3.69 plus 3.12, the total is 6.81, and this is called prime cost, the first important part. Hope you got till this prime cost. Okay, after prime cost we have to add factory overhead, any expenses or any overhead related to factory, okay, like rent and rates of factory, depreciation on factory building, then works manager salary, lighting, fuel, power, etc. All these items we have to take under the head factory overhead. Okay, so in this problem they have given only one item is there, that is factory on cost. So write here factory on cost amount is 33,600. Add these two amount, 1,74,400 plus 33,600, you will get 8,000. Per unit column we have to calculate, no? For this factory on cost, 33,600 divided by 25,600, you will get 1.31. Add these two amounts. 6.81 plus 1.31. Amount is 8.12. To this factory on cost, we have to add opening work in progress. So in problem they will give you work in progress. Opening work in progress you have to add, and closing work in progress you have to less. Simple. Opening you have to add and closing you have to less. So add opening work in progress. So in this problem they have given, see the opening, okay, see the opening balance. In opening, work in progress amount is 3,200. So take here, add opening work in progress amount is 3,200. We'll just write in the total column and not the per unit column. Okay. So opening work in progress 3,200. Add these two amounts. 2,08,000 plus 3,200, and the amount is 2,11,200, and same 8.12. Next, less closing work in progress. So closing balance here it is, see in the problem, closing stock. So closing stock amount is work in progress 12,800. Okay, so less closing work in progress 12,800. From 2,11,200 minus 12,800, you will get 1,98,400, and this figure will be the same. So we have got 1,98,400 from 2,11,200 minus 12,800. The final amount is 1,98,400, and this is called works cost. Second important part. Okay, it is called works cost. After that, we have to add administrative overhead. One more name for this, office overhead. Any charges, any expenses or any overhead related to office or administrative will be taken under this head. For example, printing and stationery, depreciation on furniture, office manager salary, then insurance, all these expenses we will take under this head. So we'll see in the problem, office and administrative overhead is 6,400. So write here office and administrative overhead. Okay, office and administrative overhead amount is 6,400. Per unit column we have to calculate, no? So 6,400 divided by 25,600, and the amount is 0.25. 6,400 divided by 25,600, you will get 0.25. Add these two figures. 1,98,400 plus 6,400, you will get 2,04,800, and here add these two, 8.12 plus 0.25, you will get 8.37, and this is called cost of production. After taking the administrative overhead, we have to add opening stock of finished goods, and we have to less opening stock of finished goods. Okay, after taking the administrative overhead, opening opening stock of finished goods we have to add, and closing stock of finished goods we have to less. Same as work in progress. Opening we have to add and closing we have to less. Opening stock of finished goods. See the opening balance. Raw material we have taken, work in progress given, taken. Next is finished goods. Finished goods amount is 12,800. So write here, add opening stock of finished goods amount is 12,800. We will take under this total cost only. 12,800. Add these two amounts. 2,04,800 plus 12,800, and the amount is 2,17,600, and this will be the same. Less closing stock of finished goods. See the closing balance. Closing stock of finished goods amount they have not given. Units they have mentioned. The finished stock amount goods is units 3,200 units. But amount they have not mentioned here. So we have to calculate the value of closing stock of finished goods. For that we will prepare one note. So I have prepared here note number 1. Calculation of value of closing stock of finished goods. Okay, in some problem they will give you the value of closing stock, and in some problem they will not give you. We have to calculate the value of closing stock of finished goods. So write note number 1, calculation of value of closing stock of finished goods. So the formula is value of closing stock of finished goods is equal to cost per unit into number of units of finished goods. Okay. So cost per unit. In this problem, they have not mentioned the cost per unit amount. So first we have to find out cost per unit. For that, we have to take this formula. Cost per unit is equal to cost of production divided by number of units produced. Okay. To find out cost per unit, we have to take this formula. So formula is cost per unit is equal to cost of production divided by number of units produced. Cost of production where we will get? Here in the solution. See here, we have already calculated. Cost of production amount is 2,04,800. Okay, see. Cost of production amount is 2,04,800. We have to write here 2,04,800. Number of units produced. So during the year, how many units they have produced? 25,600. So we have to write here 25,600. 2,04,800 divided by 25,600. You will get 8. So the cost per unit amount is 8. Now take this 8 amount here. Right here under this cost per unit 8 into number of units of finished goods. So the closing stock of finished goods quantity is 3,200. Okay, we have to write the quantity. Cost per unit is 8, just now we have calculated, and the number of units of finished goods is 3,200 units. Right here 3,200. Now multiply 8 into 3,200, you will get 25,600, and this is value of closing stock of finished goods. So we'll come to this solution part. Less closing stock of finished goods amount is 25,600. Just we have calculated 25,600. Okay, got now how we have calculated this value of closing stock of finished goods. Now add these two amounts. 2,17,600, sorry, less, okay, from 2,17,600 minus 25,600, you will get 1,92,000. Okay, from 2,17,600 minus closing stock of finished goods, that is 25,600, and the amount is 1,92,000, and this will be the same, and this is called cost of goods sold. Cost of goods sold. Next head is add selling overhead, or you can write selling and distribution overhead. Any overhead or expenses related to sales of material, sales of final goods. For example, sales manager salary, then commission to salesmen, advertisement, bad debts, free gifts, etc. All these overhead come under this head. So see in the problem, selling and distribution cost is ₹1 per unit. Okay, what they have given here? Selling and distribution cost is ₹1 per unit sold. Means if you sell one unit, one product, the selling overhead is ₹1. Like that, how many units they have sold, that we have to see. Okay, if you sell one unit, on that selling cost will be ₹1, and we have to see how many units they have sold, so that we can write the total cost of selling and distribution overhead. How many units they have sold, that they have not mentioned here in the problem, that we have to calculate. Okay, in this problem they have given opening stock of raw material, closing stock of raw material, then opening stock of finished goods, closing stock of finished goods they have given, but they have not mentioned the number of units they have sold. But by taking the information from the problem, we can calculate the number of units of sold. For that, we have to prepare note number 2, that is calculation of number of units sold. Note number 2 is calculation of number of units sold. In that, first we have to take opening stock of finished goods. Okay, first we have to take opening stock of finished goods. See, opening stock of finished goods is, here we have to take quantity. Okay, we are finding the number of units sold. Quantity we are finding how many units they have sold. So first take opening stock of finished goods is 1,600 units. 1,600 units. In that we have to add units produced during the year. Opening units is 1,600 and we have to add units produced during the year. So in this year, how many units they have produced? 25,600. Yes, in this year they have produced 25,600. Add these two, 1,600 plus 25,600, and the amount is, the unit is 27,200. Now we have to less closing stock of finished goods. Closing stock of finished goods, they have mentioned here 3,200 units. So less closing stock of finished goods, that is 3,200 units. From 27,200 units minus 3,200 units, and final units is 24,000 units. This is number of units sold. Okay, first we have to take opening stock of finished goods, then we have to add units produced during the year, then we have to less closing stock of finished goods, and final whatever the units or quantity we will get, that is called number of units sold. So during this year they have sold 24,000 units. So the selling and distribution overhead amount is what? ₹1 per unit sold. So in this year they have sold 24,000 units. So write here add selling overhead and below that write selling and distribution overhead and in bracket write how many units they have sold? 24,000. So write here 24,000 into 1. Rupee 1 they have mentioned here. Selling and distribution cost is rupee 1 per unit sold. 24,000 into 1 and the amount is 24,000. And per unit no need to calculate because already they have mentioned rupee 1. So if you sell 1 unit on that selling overhead will be rupee 1. So 24,000 or 1. Or if you want to calculate, how you will calculate cost per unit? 24,000 divided by 24,000 because the number of units sold is 24,000. That we have to take, not the output. Okay. So now add these two amount. 1,92,000 plus 24,000 and the amount you will get 2,16,000 and here 9.37 and this is called cost of sales or total cost. Okay, now we have to see in this problem what they have given. So in every problem either they will give you information related to sales or information related to profit. Any one they will give. So in this problem they have given information related to sales. Sale of finished goods is rupees 2,40,000 means in this year they have made sales of rupees 2,40,000. So first we have to write the sales amount. Okay, 2 lakh for profit they have not given. We have to calculate sales amount they have given here. So write here sales 2,40,000 from 2,40,000 minus 2,16,000. Okay, we have to get profit amount, no? So for that what we have to do? From 2,40,000 minus 2,16,000 and you will get 24,000 and this is the profit. For cost per unit total amount, sales amount is 2,40,000 divided by 24,000. Here sales amount 2,40,000, it should be divided by 24,000 and not 25,600. 25,600 is the output, number of unit produced. But for sales we have to divide it by number of units sold. So the number of units sold is 24,000. So for total per unit column what we have to do? 2,40,000 divided by 24,000 you will get 10 rupees. From 10 minus 9.37 you will get 0.63. This is the profit. Okay, hope you got the solution. I will solve one more problem on cost sheet. Problem on cost sheet. Problem number 2. The following information was extracted from the costing records of a factory for the year ended 31st December 1983. Okay. Stock on hand 1st January 1983. So this is the opening balance. So in this para they have given opening stock of raw material, opening stock of finished goods and opening work in progress. And the next is stock on hand on 31st December 1983, that is closing. Closing stock of raw material, closing stock of finished goods and closing work in progress. And certain items they have given. And during the year, total production is 51,200 tons. So taking all these information, we have to prepare cost sheet to find out total cost and cost per unit. Okay, we'll start the solution. First, we have to write cost sheet for the year ended 31st December 1983. And whatever the quantity or tons they have produced during this year, that we have to write here. Output 51,200 tons. So it will be easy to calculate the cost per unit. So the columns are particulars, total cost and cost per unit. So in cost sheet, first we have to take information related to raw material, that is opening stock of raw material, add purchases or any expenses related to purchase of raw material, and then we have to less closing stock of raw material to get the material consumed. So first I have written here material consumed. In that first we have to take opening stock of raw material. See in the problem, opening stock on one hand 1st January 1983, that is the opening balance. So opening raw material is 44,000. So write in the solution part, opening stock of raw material 44,000. In that we have to add purchases of raw material. See in the problem, where is the purchase? Purchase of raw material 2,64,000. So write here in the solution, add purchase of raw material amount 2,64,000. And if there is any expenses related to purchase of raw material, that we have to add. So in this current problem, carriage inward is there. Carriage inward, that we have to add here. So write carriage inward 3,168. Carriage inward we have to take here, and carriage outward, if they have mentioned in problem carriage outward, that we have to take under selling and distribution overhead. Carriage inward in purchases and carriage outward in selling and distribution overhead. So now add these three amount, 44,000 plus 2,64,000 plus 3,168, and the total is 3,11,168. Now less closing stock of raw material. For that we have to see closing balance. Stock on hand on 31st December 1983. So the raw material is 48,928. So write less closing stock of raw material amount 48,982. Okay, now from 3,11,168 minus closing stock, that is 48,928, you will get 2 lakh. Write in total cost column, 2,62,240. Okay, this is the total material consumed. Again we have to calculate material cost per unit. For that what we have to do, 2,62,240 divided by 51,200 to get cost per unit. 2,62,240 divided by 51,200 means whatever the total cost amount is there, it should be divided by the number of units produced. So during the year 51,200 units were produced. So divide it, you will get 5.12. That is called material consumed. After that, any direct expenses or any direct overhead, it should be added. So right here in this problem they have given direct wages, that is 2,20,000. So write in solution part direct wages amount, write in total column 2,20,000. Cost per unit, for that what we have to do, 2,20,000 divided by 51,200 and the amount is 4.29. Add these two big. 2,62,240 plus 2,20,000 and the amount is 4,82,240. Same here. 5.12 plus 4.29 and the answer 9.41. This is called prime cost, first important part. Okay, so to get the prime cost, what we have to do? We have to take the material, raw material, that is opening stock, and the purchases and the expenses related to purchases, and we have to less the closing stock of material. In that, any direct expenses or direct overhead has to be added and the amount is called prime cost. Next, add factory overhead, any charges or overhead related to factory. See in the problem where they have given expenses related to factory. See, factory rent, taxes and insurance is 88,000. So any expenses related to factory is to be taken under this head. So write here under the factory overhead, factory rent, taxes and insurance is amount 88,000. Write in inner column. If in problem they have given two or more items related to factory or any other head, write in inner column. So the factory rent is 88,000. So see in the problem, is there any other expenses related to factory? Cost of factory supervision. Cost of factory supervision. So take under the head factory overhead. Cost of factory supervision amount is 17,600. Okay, these two expenses are related to factory overhead. Add these two amount, 88,000 plus 17,600 and the amount is 1,05,600. Write in total cost column. Means the total factory overhead amount is 1,05,600. For per unit, what we have to do? 1,05,600 divided by 51,200 and the amount is 2.06. Add these two amount, 4,82,240 plus 1,05,600 and the amount is 5,87,840. Same. 9.41 plus 2.06 and the amount is 11.47. This is called manufacturing cost. To that we have to add opening work in progress and less closing work in progress. So in this problem they have given opening work in progress, that is 1st Jan. Opening work in progress is 10,560 and the closing work in progress is 35,200. So write add opening work in progress amount 10,560. Only we have to write in total column. Add these two, 5,87,840 plus 10,560 and the amount is 5,98,400. Less closing work in progress. Closing, see in the problem, closing work in progress amount is 35,200 minus 35,200 minus from 5,98,400 minus 35,200. Answer is 5,63,200. This is called works cost. After that we have to add administrative overhead or office overhead. So in this problem they have not given any expenses or overhead related to office. For example, here see here raw material, finished goods is there, then purchase, direct wages, carriage inward. So in this current problem, they have not given overhead related to office. So leave this, write here nil, and the amount will be the same, 5,63,200. In that we have to add opening stock of finished goods and less closing stock of finished goods. Opening stock of finished goods, see in the problem, that is 35,200. 35,200 is the opening stock of finished goods. See the closing balance, finished goods 70,400. So add opening stock of finished goods amount 35,200. We have to take amount, not the quantity. Add these two, 5,63,200 plus 35,200, and the amount is 5,98,400 less closing stock of finished goods, amount is 70,400. Okay, from 5,98,400 minus 70,400, and the amount is 5,28,000, and cost per unit column will be the same, and this is called cost of goods sold. Next we have to add selling and distribution overhead, expenses or overhead related to selling of goods. So in this problem they have given advertising, discounts allowed, etc. at 75 paise per ton sold. See in the problem, advertising, discounts, etc. at 75 paise per ton sold. Means if you have sold 1 ton of products, the selling expenses will be, that is advertising and discount allowed expenses will be 75 paise for 1 unit, for 1 ton. Like that, how many tons they have sold, that we have to calculate. So in this problem they have not given how much sales they have made during this year, that we have to calculate. For that I have prepared a note here in this box. Note, calculation of number of units sold. First, to calculate the number of units sold, first we have to take opening stock of finished goods. So opening stock of finished goods, see the quantity, not the amount. This is the quantity, 3,200 tons. Add produced. So during this year they have produced 51,200 tons. Add that. Add these two amounts, 3,200 plus 51,200, and the total is 54,400 less closing stock of finished goods. Closing stock, see in the problem, closing stock of finished goods is 6,400 ton. Right here in the note column, closing stock of finished goods is 6,400. Now less from 54,400 minus 6,400, you will get 48,000 tons. Means during this year they have sold 48,000. Number of units sold is 48,000. Come to the solution part. Write here selling and distribution overhead. In that, advertisement, discount allowed. So if you sell 1 unit, 1 ton, the selling expenses will be 75 paise. I have written here per unit column 0.75. For per ton or per unit, the expenses is 0.75. Total we have to get, no. So for that I have written in the bracket. So number of units sold is 48,000. Just now we have calculated. So 48,000 into 0.75. And amount you will get 36,000. Add these two figures. 5,28,000 plus 36,000. And the amount is 5,64,000. Per unit column. 11.47 plus 0.75 and total is 12.22. So in every problem, either they will give you information related to profit or information related to sales. So in this problem, they have given information related to sales. See, sale of finished goods, that is 6,60,000. See in the problem, sale of finished goods is 6,60,000. So this is the sales amount. So first we have to write sales amount, that is 6,60,000. 6,60,000. And per unit column, how we will calculate? 6,60,000 divided by 48,000. Okay, not the 51,200. This is the quantity produced and this is the number of units sold. So sales will be calculated on the number of units sold, no? So that's why 6,60,000 divided by 48,000, you will get 13.75. To get the profit amount, what we have to do? From 6,60,000 minus 5,64,000. From 6,60,000 minus 5,64,000. You will get 96,000. This is the profit. 96,000. Same for per unit column. From 13.75 minus 12.22, you will get 1.53. This is the profit balancing figure. Hope you got the solution. In my next video, I will solve one more problem on cost sheet. For more such videos, do like, share and subscribe my channel Avanit Academy. Class we will solve problem on tender and quotation. In this type of problem, we have to prepare two cost sheet. One is current year cost sheet and second estimated cost sheet to find out estimated cost and profit. So let's start. Problem number 3. The following figures are extracted from the books of a company for the year ended 31st December 2008. Direct material, in that opening stock, purchases, closing stock, direct labor, chargeable expenses, office expenses, marketing expenses and factory overhead. So these all information related to 2007. In 2007, the annual output is 10,000 units and for the year 2008, company plans to produce 30,000 units. Prepare a statement of estimated cost for 2008 taking into consideration following additional particular. A. Labor cost will increase by 10%. B. 50% of factory overhead are variable and fixed factory overhead will go up by rupees 15,000. C. 40% of marketing expenses are fixed. D. Office expenses will increase by 25%. So in this type of problem, we have to prepare two cost sheet. One is cost sheet for the year 2007 and cost sheet for the year 2008. So we'll start the solution. Cost sheet number 1. Cost sheet for the year ended 31st December 2007. In 2007, the output is 10,000. So I have written here output 10,000 units. Columns particular, total cost and cost per unit. First we have to take direct material. So the format of cost sheet I have already uploaded. Please check on my channel Avanit Academy. Direct material, in that we have to take opening stock of raw material, add purchases and less closing stock of raw material. See in the problem, opening stock of raw material is 60,000. So write in solution part, opening stock of raw material 60,000. In that add purchases. Purchase during the year is 5,80,000. Write here 5,80,000. Add these two amounts. 60,000 plus 5,80,000. Total is 6,40,000. Less closing stock of raw material. Closing stock 1,20,000. Write in solution 1,20,000. From 6,40,000 minus 1,20,000, you will get 5,20,000. This is the total material consumed. Again we have to find out cost per unit. For that what we have to do? 5,20,000 divided by 10,000 number of units produced, that is 10,000, and you will get 52. This is called material consumed. Next we have to take direct expenses. So in this problem they have given direct labor. Direct labor means direct wages. So write in solution direct wages amount 1,40,000. For per unit 1,40,000 divided by 10,000, you will get 14. Chargeable expenses. This also we have to take before prime cost. So write in solution chargeable expenses amount 20,000 per unit, 20,000 divided by 10,000, rupee 2. Add these three amounts. 5,20,000 plus 1,40,000 plus 20,000, total is 6,80,000. Here 52 plus 14 plus 2, total 68, and this is called prime cost. Add factory overhead. See the problem, factory overhead amount is 1,40,000. But see the below para, point B. What they have mentioned here, 50% of factory overhead are variable. Just concentrate on this part. 50% of factory overhead are variable. So the expenses are classified into two parts, fixed and variable. So in this problem what they have given, the factory overhead 50% is we have to take as variable. So how much remain? 50%. Yes or no? 100% mean 100. Of that 50% we have to take as variable factory overhead, and remaining 50 we have to take as fixed factory overhead. So I have written here, see the solution part, add factory overhead. In that first we have to write fixed. So the total amount of factory overhead is 1,40,000 into 50%. So whatever the factory amount, overhead amount is there, Of that 50% we have to take as fixed overhead and remaining 50% we have to take as a variable overhead. So 1,40,000 into 50%, and for variable also same 1,40,000 into 50%. You will get 70,000 respectively. Per unit 70,000 divided by 10,000 units. You will get rupees 7. Add these three amounts. 6,80,000 plus 70,000 plus 70,000. Total is 8,20,000. Here 68 plus 7 plus 7, total 82. And this is called works cost. Next, add administrative overhead, that is office expenses. Office overhead is also called administrative overhead. Office overhead amount is 60,000. So write in total column 60,000. Per unit 60,000 divided by 10,000. Rupees 6. Add these two. 8,20,000 plus 60,000, total 8,80,000. Here 82 plus 6, 88. This is called cost of production. Add selling and distribution overhead. Marketing expenses. See the problem. Marketing expenses. So marketing expenses we have to take under selling and distribution overhead. See this C point. 40% of marketing expenses are fixed. So this marketing expenses is classified into two types, that is fixed and variable. 40% we have to take as fixed overhead, and now how much remain? Percent is 100. Yes, 40%. Total 100%. Of that 40% we have to take as fixed overhead. From 100 minus 40 you will get 60%. So 60% we have to take as variable marketing overhead. Understood? 40% of marketing expenses are fixed. So how much remains? 60%. So this we have to take as a variable overhead. So I have written here, add selling and distribution overhead, marketing expenses. So the amount is 60,000. First write fixed, write the amount 60,000 into 40%. You will get 24,000. 60,000 into 40%, amount is 24,000. Next we have to take variable. Amount will be the same. Total marketing expenses amount 60,000 into 60%. Understood how we got this 60%? From 100 we have to minus 40%. You will get 60%, and this we have to take as variable. 60,000 into 60%, amount is 36,000. Per unit what we will do? 24,000 divided by 10,000, 2.4. 36,000 divided by 10,000, 3.6. Add these three amounts. 8,80,000 plus 24,000 plus 36,000. Total is 9,40,000. And here 88 plus 2.4 plus 3.6, 94. This is called cost of sales or total cost. In this problem they have not given information related to sales and profit. So just total cost we have to calculate. So this is the part 1 where we have prepared cost sheet for the year ended 2007. Next we have to prepare estimated cost sheet for the year ended 31st December 2008. See in the problem. In 2008, company plans to produce 30,000 units. So the output is 30,000 units. Columns, particulars, cost per unit and total cost. First we have to take material consumed. For that we have to refer previous year cost sheet, that is cost sheet for the year ended 2007, and we have to refer cost per unit column and not total cost column, because this total cost is related to 10,000 units, and for the year 2008 the output is 30,000 units. So just concentrate on cost per unit column. So the material consumed cost per unit amount is 52. So in estimated cost sheet write 52. Material consumed cost per unit is 52. Now we have to get total cost. For that what we have to do? 30,000 into 52. 30,000 into 52. We will get 15,60,000. Understood how we got this 15,60,000? 30,000 into 52. Total cost is 15,60,000. Next, direct labor. Direct labor cost per unit amount is 14. Refer the 2007 year cost sheet. 14. But in second para, what they have mentioned here, read the point A. Labor cost will increase by 10%. In 2008, the labor cost will increase by 10%. Increase means plus. So direct labor in bracket write 14 plus 10%, you will get 15.4. Okay, this is one shortcut method to calculate the cost per unit. So direct how you can calculate? 14 plus 10%, you will get 15.4. And for total column, 15.4 into 30%, into 30,000, you will get 4,62,000. Next, chargeable expenses. Cost per unit is 2. So write in estimated column, cost per unit column 2. And for total, 30,000 into 2, 60,000. Add these three. 52 plus 15.4 plus 2. Total is 69.40. Add these three figures. 15,60,000 plus 4,62,000 plus 60,000. Total amount is 20,82,000, and this is called prime cost. So in estimated cost sheet, what we have to do? We have to get the total cost and cost per unit column, we have to refer the cost sheet of 2007, that is cost per unit column. Add factory overhead. So factory overhead is divided into two parts, fixed and variable. Fixed. Okay. Any expenses, if they have mentioned fixed, then we have to take the total cost column. Total cost column amount. Because it is fixed in nature. It will not change repetitively. So, the expenses which are fixed in nature, the amount will be fixed. Variable means which goes on changing. So, fixed factory overhead, in that we have to write first fixed. So, fixed amount is 70,000. 1000. For fixed expenses, we have to refer total cost column. We have to take the total amount and not the cost per unit, because fixed overhead are fixed in nature. They will not change. So 70,000. Read the point B in problem. And see this part, and fixed factory overhead will go up by 15,000. So in 2008, the fixed factory overhead will increase by rupees 15,000. So add increase 15,000, and total of these two is 85,000. Write in total cost column. 70,000 plus 15,000, 85,000. And we have to calculate cost per unit. For that, what we have to do? 85,000 divided by 30,000, you will get 2.83. 85,000 divided by 30,000 is equal to 2.83. Next, variable. For variable, we have to see the 2007 cost sheet per unit column. Variable amount is 7. For fixed, we have to take total amount, and for variable, we have to take cost per unit amount. 7. For total, 7 into 30,000. Total is 2,10,000. Add these three. 69.40 plus 2.83 plus 7. Total is 79.23. Total cost 20,82,000 plus 85,000 plus 2,10,000. Total 23,77,000. Add administrative overhead. In that, office expenses. So for office expenses, they have not mentioned how much is fixed or variable, and generally the administrative expenses or the office overhead are fixed in nature. So we'll take the total amount. Office expenses total amount is 60,000. Refer the 2007 year cost sheet. Office expenses amount is 60,000. So we'll write here 60,000. And read the point D. Office expenses will increase by 25%. Plus. So in this 2008, the office expenses, it is increased by 25%. So write in bracket 60,000 plus 25%. In calculator also you can type like this only, 60,000 plus 25%. You will get 75,000. Okay, this is a direct calculation. No need to do first 60,000 into 25% and the amount we have to add to 60,000. No, this is a direct calculation, shortcut method. 60,000, in calculator you just type 60,000 plus 25% and directly you will get 75,000. This is the total. Now we have to calculate cost per unit. For that, 75,000 divided by 30,000, you will get 2.5. Add these two, 79.23 plus 2.5 and total 81.73. Here 23,77,000 plus 75,000, total 24,52,000. This is called cost of production. Add selling and distribution overhead. In that, fixed and variable is there. For fixed, see the 2007 year cost sheet total column. Fixed overhead amount is selling and distribution 24,000. So in estimated cost sheet, write in total column 24,000. For per unit 24,000 divided by 30,000, you will get 0.8. For variable, we have to refer cost per unit column of 2007 cost sheet. Variable 3.6. See the cost sheet of 2007, 3.6. So write in estimated cost sheet 3.6. For total 3.6 into 30,000, you will get 1,08,000. Add these three. 81.73 plus 0.8 plus 3.6, total 86.13. Here 24,52,000 plus 24,000 plus 1,08,000, total is 25,84,000, and this is cost of sales. Simple. To prepare the estimated cost sheet, what we have to do? We have to refer the previous year cost sheet. In that, cost per unit column. Cost per unit column, we have to write the amount and we have to multiply with the output to get the total cost amount. For fixed overhead, we have to refer the total cost column, and for variable overhead, we have to refer the cost per unit. Okay. Hope you got the solution. In my next video, I will solve one more problem on tender and quotation. Please subscribe my channel for more such videos. Problem number 4. Purnima Scooters find that the total cost of producing 100 scooters in the year 1999 was rupees 30 lakh, which were sold at rupees 33,000 each. The cost consisted of materials rupees 12 lakh, direct wages 13 lakh 50,000, factory overhead 2 lakh 70,000, office overhead 1 lakh 41,000, and distribution overhead rupees 390 per scooter. So, in the year 1999, they are producing 100 scooters and the cost of production is 30 lakh, and each scooters were sold at rupees 33,000. And by taking these all information, we have to prepare cost sheet for the year 1999. For the year 2000, the production is 200 scooter. Cost of manufacturing scooter is estimated as under. Point A. Each scooter will require material of rupees 13,05,000, labor 13,500. B. Factory overhead will bear the same relation to wages as in the previous period. C. The percentage of office overhead on factory cost will be the same as in the past. There will be an increase of rupees 90 per scooter in selling and distribution overhead. Prepare a statement showing the profit the company would make per scooter if it increases the price of scooter by rupees 3,000. So in the year 2000, they are producing 200 units, 200 scooters, and by taking all these information, we have to prepare estimated cost sheet for the year 2000. Okay, in this problem, we have to prepare two cost sheet. Number 1, cost sheet for the year 1999. Second, estimated cost sheet for the year 2000. Okay, we'll start the solution. Number 1, cost sheet for the year 1999. Output 100 scooter. In the year 1999, they are producing 100 scooters. So write here 100 scooters. Particulars, total cost and cost per unit. First we have to take material or direct material. See in the problem, direct material is rupees 12 lakh. material 12 lakh. For per unit, what we have to do? 12 lakh divided by 100, we will get 12,000. Next, direct wages. See in the problem. Direct wages 13 lakh 50,000. Write in solution. Direct wages 13 lakh 50,000 per unit. 13 lakh 50,000 divided by 100, 13,500. Add these two. 12 lakh plus 13 lakh 50,000, total is 25 lakh 50,000. Here 12,000 plus 13,500, total 25,500, and this is called prime cost. Add factory overhead. See in the problem, factory overhead is 2,70,000. So same we'll write here in solution. Add factory overhead amount 2,70,000 per unit. 2,70,000 divided by 100, you will get 2,700. Single item is there, so add these two. 25 lakh 50,000 plus 2,70,000, total is 28 lakhs 20,000. Here 25,500 plus 2,700, total is 28 lakh 200. This is called works cost. Add administrative overhead. See in the problem, office overhead. Administrative overhead is also called office overhead. Amount is 1,41,000. So write in solution, administrative overhead 1,41,000 per unit. 1,41,000 divided by 100, amount is 1,410. Add these two. 28,20,000 plus 1,41,000, and the total is 29,61,000. Here 28,200 plus 1,410, total is 29,610, and this is called cost of production. Add selling and distribution overhead. See in the problem, distribution overhead is rupees 390 per scooter. Means if you sell one scooter, here they have mentioned per scooter. If you sell one scooter, on that distribution overhead is 390 per unit they have given, not the total. So on one unit, on one scooter, the selling overhead is 390. So first write in per unit column, selling and distribution. See in the problem, add selling and distribution overhead. First we have to write in per unit column 390, because they have given information related to per scooter. Selling overhead per scooter is 390. 390 for total, what we have to do? 390 into 100. To get the total amount, we have to multiply it, and to get the cost per unit amount, we have to divide. So here for selling overhead, 390 into 100, you will get 39,000. Add these two. 29,61,000 plus 39,000, total is 30 lakh per unit. 29,610 plus 390, total is 30,000, and this is called cost of sales. So see the first para. In the year 1999, cost of production is 30 lakh. So same amount we have got, cost of sales. Yes, 30 lakh. And each scooter were sold at rupees 33, which were sold at rupees 33,000. Means they are selling one scooter at rupees 33,000. So sales amount per unit, per scooter selling amount is 33,000. Like that, in 1999 they have sold 100 scooters. So 33,000 into 100. You will get 33 lakhs. Understood? This 33 is selling price of one scooter. So first we will write in cost per unit column, that is 33,000 into 100. You will get 33 lakh. So this is the sales. So from 33 lakh minus 30,000, you will get 3 lakh. Okay, in this problem they have given information related to sales. So first we will take the sales amount, that is 33 lakh total, and per unit 33,000. From 33 lakh minus 30 lakh, you will get 3 lakh, and per unit from 33,000 minus 30,000, you will get 3,000, and this is called profit balancing figure. Understood? This is the cost sheet for the year 1999. Next we have to prepare estimated cost sheet for the year 2000. Now see the below para. See the question. For the year 2000, the production is 200 scooter. In 2000, they are producing 200 scooters. So I have written here output 200 scooters, and the columns particulars, cost per unit, and total cost. Here first we have to take cost per unit and then total. Read point A. Each scooter will require material of rupees 13,500 and labor 13,500 on each scooter. Okay. So the per unit per scooter material amount is 13,500 and labor same 13,500. So we will write here material 13,500 per unit. Each scooter they have mentioned, no? So per unit 13,500. To get the total amount, what we have to do? 13,500 into 200. We will get 27 lakh. Next we will take labor. Same amount they have given here, that is 13,500. Total 13,500 into 200, amount 27 lakh. Add these two. 13,500 plus 13,500, total is 27,000. Total column 27 lakh plus 27 lakh, total is 54 lakh, and this is called prime cost. Add factory overhead. Read this point B. Factory overhead will bar the same relation to wages as in the previous period. So how you will calculate this factory overhead? On the basis of wages. So for that we have to prepare a note. See in this box, calculation of overhead percentage. In that, note number 1, percentage of factory overhead to wages. For that, one formula is that percentage is equal to factory overhead into 100 divided by direct wages. Or you can write like this, percentage is equal to factory overhead divided by direct wages into 100. Okay, percentage. So factory overhead for the estimated cost sheet for the year 2000, they have not given us the amount of factory overhead, but by taking this formula we have to calculate the percentage of overhead to get the factory overhead amount. So here factory overhead divided by wages they have mentioned here. So factory overhead, from where we will take the amount? From the previous year cost sheet of 1999. So in 1999, factory overhead amount is how much? See in the previous year cost sheet 1999, 2,70,000 Factory overhead amount is 2,70,000. That we will write here in this formula. Divided by direct wages. In 1999, direct wages is how much? 13,50,000. See the total column. Factory overhead amount is 2,70,000 and direct wages amount is 13,50,000. So we'll write here. See this note part. Note number 1. Factory overhead divided by direct wages into 100. Factory overhead amount is 2,70,000 divided by 13,50,000 into 100. So calculate it. 2,70,000 into 100 divided by 13,50,000 and we will get 20%. That we have to write 20% of wages. Means in this estimated cost sheet we will take factory overhead amount 20% of direct wages. So in this estimated cost sheet, whatever the direct wages amount is there, of that 20% we will take as factory overhead. Okay, so point B, what it says, factory overhead will bar the same relation to wages as in the previous year. So for that we have to take this formula, factory overhead into 100 divided by direct wages, and the answer we will get 20% of wages. So come to our estimated cost sheet part. Add factory overhead. So overhead, how much we have to charge? Factory overhead 20% of wages. See the estimated cost sheet. Here labor means direct wages. How much it is? See the cost per unit column, 13,500. Yes, labor means direct wages. So amount is 13,500. So write in the bracket, I have written here 13,500 into 20%. From here I have taken note 1, 20% of wages. So whatever the direct wages amount is there or labor amount is there, of that 20% we have to take as factory overhead according to point B. 13,500 into 20% amount is 2,700 we will get. For total 2,700 into 200, total is 5,40,000. Understood? Add these two. 27,000 plus 2,700, total 29,700. Total column 54 lakh plus 5,40,000, total is 59,40,000. And this is called works cost. Now read the point C. The percentage of office overhead on factory cost will be the same as in past. So for the year 2000, they have not clearly mentioned the amount of administrative overhead or office overhead, but by taking this point C, percentage of office overhead on factory cost, we have to calculate the amount of administrative overhead. For that we have to prepare note number 2. Percentage of administrative overhead to works cost. For factory overhead, it is related to direct wages, and administrative overhead, it is related to works cost. And if they have not mentioned selling and distribution overhead, that is also related to works cost. Okay. So note number 2, percentage of factory overhead to works cost. So the formula is percentage is equal to administrative overhead divided by works cost into 100. Okay. And to put the amount for this formula, to this formula, we have to refer the previous year cost sheet, that is 1999 year cost sheet. So administrative amount is how much in 1999? See the cost sheet. Administrative overhead amount is 1,41,000. Refer the cost sheet for the year 1999. So the administrative overhead is 1,41,000. Works cost. Works cost is how much? 28,20,000. See the cost sheet of 1999. 28,20,000. Same we will write here. Administrative overhead 1,41,000 divided by works cost amount, that is 28,20,000. Calculate 1,41,000 into 100 divided by 28,200 and you will get 5% of works cost. 5% you will get. To that you have to write 5% of works cost. Means whatever the works cost amount is there, of that 5% you have to take as administrative overhead. So in estimated cost sheet, whatever the works cost amount is there, of that 5% we have to take as administrative overhead. Come to solution part. Estimated cost sheet. Add administrative overhead. In bracket you have to write works cost how much? See the estimated cost sheet. Works cost amount is how much? 29,700. So of this 29,700, 20% of it we have to take as 5% of 29,700 we have to take as administrative overhead. So I have written here in bracket 29,700. Understood? From where I got this 29,700? Works cost amount, that is 29,700 into 5%. Just now we have calculated. So the amount is 1,485. 29,700 into 5%. Okay, 5% you have to calculate, not just 5%. You will get 1,485. And for total 1,485 into 100 you will get 2,97,000. Add these two. 29,700 plus 1,485 and the total is 31,185. Total column, total cost column 59,40,000 plus 2,97,000 and the total is 62,37,000. This is called cost of production. Add selling and distribution overhead. We'll see in the question what information they have given. Point D. There will be an increase of rupees 90 per scooter in selling and distribution overhead. So in the year 2000 they have increased the amount of selling and distribution overhead, that is by 90 rupees. So in the year 1999 selling and distribution amount was 390. Yes or no? Selling and distribution overhead amount is, see the per unit column of 1999 cost sheet, 390. Yes, this year they have increased 90 rupees. So write here in the bracket, previous it was 390 and this year they have increased the 90 rupees. So I have written here plus. So 390 plus this year increased amount 90 and the total is 480. Per unit. We have to calculate total. 480 into 100. Total selling distribution overhead amount is 96,000. Add these. 31,185 plus 480. Total 31,665. Total cost 62,37,000 plus 96,000. Total 63,33,000.  33,000 and this is called cost of sales. Read the last sentence. The company in the problem. The company would make per scooter if it increases the price of the scooter by rupees 3000. So whatever the amount of selling amount is there of scooter, in the year 2000 it is increased by 3000. See the sales amount of last year 1999, 33,000. Yes, per scooter were sold for rupees 33,000. But this year, in the year 2000, they have increased the selling price, that is by 3000 rupees. So write sales, previous amount is 33,000 plus this year they have increased the price of scooter, that is 3000, and total of these two 33,000 plus 3000, total 36. In last year the selling amount was 33,000 and this year 36, because in the year 2000 they have increased the price of scooter rupees 3000. So total amount is 36,000. So in the year 2000 the scooter is sold for rupees 36,000. This is per unit, per scooter. We have to calculate total cost, total sales amount. So 36,000 into 200, you will get 72 lakh. From 36,000 minus 31,665 to get the profit, you will get 4,335. Understood how? 36,000 minus 31,665, you will get 4,335. This is the profit on per scooter. For total, same, from 72 lakh minus 63 lakh 33,000, you will get 8 lakh 67,000 profit, balancing figure. So on per scooter they have made profit of rupees 4,335 and total profit is 8 lakh 67,000. So this is the cost sheet for the year 1999 and estimated cost sheet for the year 2000. Okay, hope you got the solution. Problem number 5. A television manufacturing company finds that in 1989 it cost rupees 6,16,000 to manufacture 200 black and white TVs which were sold at rupees 4,000 each. Cost was made up material 2 lakh, direct wages 3 lakh, factory overhead 60,000, office overhead 56,000. Total is 6,16,000. For the year 1990, the company estimates to sell 300 television and point A, the television will require the same cost in material and wages. B, that the factory overhead will bear the same relation to direct wages as in the previous year. C, that the percentage of overhead on factory cost will be the same as in the previous year. Prepare a statement of cost for 1990 and find out the estimated total profit and per unit if the selling is enhanced by rupees 80 per television. So in this problem we have to prepare two cost sheet. Number 1, cost sheet for the year 1989 and cost sheet for the year 1990. In 1989 they are producing 200 television which were sold at rupees 4,000 each, and certain information they have given, and we have to prepare the cost sheet for the year 1989. And second one is estimated cost sheet for the year 1990 where they are producing 300 television and certain information they have given, and we have to prepare estimated cost sheet for the year 1990. Yes, let's start the solution. Number 1, statement of cost and profit for the year ended 1989. So in 1989 they are producing 200 television. So I have written here output 200 TVs. Columns, particulars, total cost and cost per unit. First we have to take material. Material is 2 lakh. Material 2 lakh. Cost per unit 2 lakh divided by 200, you will get 1000. Cost per unit is 1000. Next, direct wages. Direct wages amount is 3 lakh. Cost per unit 3 lakh divided by 200, number of units produced, 1500. Add these two. 2 lakh plus 3 lakh, total is 5 lakh, and per unit column 1000 plus 1500, total is 2500, and this is called prime cost. Next, add factory overhead. Factory overhead amount is 60,000. Total 60,000, and cost per unit 60,000 divided by 200, we will get 300. And total of these two 5,60,000, and here 2,500 plus 300, we will get 2,800. This is called works cost. Add office overhead. Office overhead amount is 56,000, and total of these two 5,60,000 plus 56,000, total is 6,16,000. Per unit column 2,800 plus 280, total 3,080, and this is called cost of production. Okay, in this problem they have not given information related to profit, but sales information they have given, which were, see here, 200 televisions were sold at rupees 4,000 each. Means one television is sold for rupees 4,000. So write sales cost per unit, write 4,000. One TV is sold for rupees 4,000. So cost per unit is 4,000, and total how we will calculate? 4,000 into 200, we will get 8 lakh. So first we have to write in cost per unit column. Here they have mentioned each TV sold at rupees 4,000. So 4,000, and total cost 4,400. 4,000 into 200, we will get 8 lakh. From 8 lakh minus 6,16,000, we will get profit amount, that is 1,84,000. Per unit column, from 4,000 minus 3,80,000, we will get 920. This is profit balancing figure. So this is the cost sheet for the year 1989. Second one, estimated cost sheet, or you can write estimated statement of cost and profit for the year 1990. Now see the below para. In 1990, they are producing 300 television. So I have written here output 300 TV. Columns, particulars, cost per unit and total cost. First we have to write cost per unit and then total. So we'll read the point A, that television will require the same cost in material and wages. Means whatever the material cost or direct wages amount is there of last year, same for the 1990. So in 1989 material cost is, see the cost per unit column and not total cost. This total cost is related to 200 television, and in 1990 they are producing 300. So see the cost per unit column. Material amount is 1000 and direct wages is 1500. So the material and direct wages amount will be the same for 1990 cost sheet. So write material amount is 1000. Understood from where I took this 1000? From previous year cost sheet, cost per unit column. Material is 1000. Direct wages 1500 from previous year cost sheet. So this is the cost per unit. We have to calculate total cost. For that what we have to do? 1000 into 300. You will get 3 lakh. 1500 into 300. Total 4,50,000. Add these two. 1000 plus 1500. Total 2500. Total cost 3 lakh plus 4,50,000. Total is 7,50,000. This is called prime cost. Next, add factory overhead. We'll read the point B. That the factory overhead will bear the same relation to direct wages as in the previous year. So, this factory overhead is related to direct wages. Okay, for that we have to prepare a note. Note number 1. I have written here in this box. Note number 1. Calculation of percentage of factory overhead to direct wages. And the formula is percentage is equal to factory overhead divided by direct wages into 100. So after writing the formula, we have to put the amount. So factory overhead amount is 60,000. See the previous year cost sheet, 1989 cost sheet. Factory overhead amount is 60,000. So this 60,000 we will take here, 60,000 divided by direct wages. Direct wages amount from where we have to take? From 1989 cost sheet and not from 1990 cost sheet. So here direct wages amount is 3 lakh. So 60,000 divided by 3 lakh into 100. You will get 20%. 60,000 into 100 divided by 3 lakh, we will get 20%. So in estimated cost sheet, factory overhead, how much we have to charge? 20% of wages. Add factory overhead. Come to solution part. In bracket I have written. So how much we have to charge? 20% of wages. So in estimated cost sheet, wages amount is how much? 1,500. So 1,500 into 20%, we will get 300. First we'll calculate cost per unit. 300. And for total 300 into 300, we will get 90,000. Add these two. 2,500 plus 300, total is 2,800. And total of these two, 7,50,000 plus 90,000, total is 8,40,000. And this is called works cost. Add office overhead. See point C1. That the percentage of office overhead on factory cost will be the same as in the previous year. So office overhead we have to charge according to the on factory cost. Factory cost means works cost. So note number 2, calculation of percentage of office overhead to works cost. I have written here works cost. Factory cost is also called works cost. So the formula is percentage is equal to office overhead divided by works cost into 100. Office overhead amount is, see the 1989 cost sheet. Office overhead amount is 56,000. So write here 56,000 divided by works cost. Previous year works cost amount is 5,60,000. See 1989 cost sheet. 5,60,000 into 100. Calculate 56,000 into 100 divided by 5,60,000. We will get 10%. So in estimated cost sheet, office overhead, how much we have to charge? 10% of works cost. Add office overhead. So in estimated cost sheet, works cost amount is how much? 2,800. So write in bracket 2,800 into 10% from this note. So we will get 280 per unit. 280 total cost. 280 into 300, we will get 84,000. Add these two. 2,800 plus 280, total is 3,080. In here 8,40,000 plus 84,000, total is 9,24,000, and this is called cost of production. So for the 1990, they have given information related to sales, that if the selling, last sentence, if the selling is enhanced by rupees 80 per television. In 1989, one TV is sold for rupees 4,000. See here, last sales amount 1989. One television is sold for rupees 4,000, but in 1990 they have increased the amount by rupees 80. So I have written here sales, last year amount is 4,000 and this year they have increased 80 rupees. So 4,000 plus 80, total is 4,080. In 1990, each television is sold for rupees 4,080. Total sales amount 4,080 into 300, we will get 12,24,000. 12,24,000. From 4,080 minus 3,080, you will get 1,000. Okay, from 4,080 minus 3,080, we will get 1,000. For total, from 12,24,000 minus 9,24,000, we will get 3 lakh, and this is the profit balancing figure. So this is the cost sheet for the year 1989 and cost sheet for the year 1990. Hope you got the solution. In my next video, I will explain the job costing method. Okay. Thank you, friends.